Hey friends, Joe Withrow here, broadcasting from my solar shed way up in the mountains of Virginia. I've got another Phoenician League entry for you today, really another dispatch from the frontier for you before we dive into the world of cash flow investments today. So I wanted to show you this picture. Check this out. Okay, I snapped this picture just as the sun began its ascent over the mountains overlooking our property, and I've never seen the sky light up orange like this before. To me, this gravel road that you see here, it leads to the end of the world. It winds its way across our property to the very last utility pole in the area. Then the road ends. It just stops at the foot of the mountains. There's not even room enough to turn around if you were to drive all the way to the end of the road. And to me, there's something grounding about that. Out here, the rat race, it feels like a world away. And you're reminded of what truly matters: family, freedom, and building a solid foundation that lasts. So that brings us to our discussion on cash flow investments today. Building cash flow is not just about making money. It's about creating a life where you call the shots. I want to emphasize that. But let's step back for a minute here. We've been exploring how to build a robust asset portfolio, one that makes your money bulletproof and generates consistent monthly income for you to fuel your freedom. As a reminder, a bulletproof asset portfolio includes reserve assets, strategically warehoused cash, capital efficient stocks, cash flow investments, and alternative investments. Today, we're going to dive into cash flow investments. These are the engines that pay you month after month, year after year. So the two assets we'll cover today are rental real estate and mortgage notes. So rental real estate, it's a timeless hard asset. Famed industrialist Andrew Carnegie once said that 90% of all millionaires become so through owning real estate. Now, I'm not sure if that's the case today, but this speaks to the timeless nature of this asset class. The key to investing in real estate is to focus on quality and cash flow. Cash flow is king. I know there are plenty of people who speculate on real estate hoping that the price is going to go up, and others are always looking for an old dilapidated property that they can buy for a song, get it for pennies on the dollar, fix it up, and then flip it. I don't care much for any of those games. To me, the best approach to real estate is to buy a nice new construction property and rent it out to tenants on a long-term lease. Having owned both new construction and older rehabs, I can say from experience that new properties usually make for better rentals. It all comes down to a principle we discussed last time. Investing is about ownership. So when it comes to my real estate portfolio, I focus on homes that I wouldn't mind living in myself. These are properties that I'm very happy to own. But remember, cash flow is king. I would never buy a property if it could not produce cash flow from day one. That is to say, the rent must be able to cover the mortgage, taxes, insurance, and the property management costs. And speaking of, we should always use a professional property management firm to manage our properties. I know people who self manage. You save a little money doing that, but these folks are constantly stressed to the max. Self managing your properties, it's like having a second job. I'm not kidding. I mean, the guys I know, their phone is just blowing up all day long. So personally, I would much rather hire a company to do that work for me. And I know they're going to be better at it anyway. So if we buy nice properties that are professionally managed and generate cash flow for us, real estate provides us with steady passive income, an inflation hedge, and a tax advantage, or tax advantages, I should say. So our property manager collects the rents and then deposits them into our bank account every single month. It doesn't get much more steady or passive than that. And then if we think about it, fixed rate mortgages become easier to pay as inflation rises and rents increase. So it offers something of a shield against inflation. Then there's the tax advantages. Depreciation can offset our rental income entirely, wiping away our tax liability. This makes the cash flow we receive purely net income. And we can also run rental real estate through an LLC to open the door to a myriad of other tax deductions. Now, getting into real estate is a slow game at first. But imagine owning a portfolio of 10 single family homes, each generating $600 a month in cash flow. That's $6,000 a month coming in like clockwork. Not bad for passive income. And then we can juice our income, juice our cash flow with mortgage notes. When we talk about investing in mortgage notes, we're talking about buying somebody else's mortgage. So when they make their monthly payment, it comes to you. Their payment is your cash flow. I don't think this is well known, but anybody can buy mortgages like this. There are no restrictions or accreditation requirements whatsoever. And there's an active secondary market where people buy and sell mortgage notes rather routinely, if you know where to find it. It's a relatively small marketplace, but that's just because most investors don't know that this asset class exists. People don't know that you can buy mortgages as an investment. Now, we use professional loan servicers to manage our notes portfolio for us. They're like our property managers. They send out monthly statements, collect payments, and provide customer service to the property owner. We're not involved in any of that. The homeowner has no idea that we exist. And then, just like the property manager, the loan servicer deposits the principal and interest portion of the mortgage payment into our bank account each month. And they keep a very small portion of it as their fee, but we get the bulk of it. And this makes owning mortgage notes about as hands off as possible. It's passive income, especially because we don't have to worry about repairs and maintenance as we do when we own rental real estate. So, in a sense, mortgage notes are the other side of the coin. If purchased correctly, mortgage notes come with considerably less risk as compared to physical properties. And mortgage notes are also capable of producing stronger cash flow in the current climate. Yeah. And for example, I'm consistently seeing attractive notes that are selling in the $10,000 to $40,000 range, which makes the barrier to entry a little bit lower. So to give you a feel for it, I've seen quite a few notes in this price range recently that produce between $500 and $600 a month in income for the investor. Now, there are some trade offs, however. Mortgage notes are not a hard asset with the potential to appreciate in value. Instead, the value of each note diminishes with each monthly payment made. Along the same line, mortgage notes come with a fixed term. Once the note is paid off, the cash flow disappears, right? Thus, we need to be mindful about reinvesting the cash flow that we receive. All right. And so that brings us to the last piece of the equation, and that's the tax piece. Okay. The real magic happens when you are mindful about building a portfolio of both real estate and mortgage notes. If we structure it right, we can accelerate depreciation on our real estate and use it as a phantom loss that offsets the income we receive from mortgage notes as well. And it can get even more advanced than this. If we run our operations through a management company, we can potentially shift a chunk of our personal expenses from ourselves to the business, making them tax deductible. That's a big secret that America's wealthiest families have used for generations now. It's all about being as tax efficient as possible. So, if we go about building a portfolio of cash flow investments in this way, it does not take long to have thousands of dollars in tax free cash flow coming to us every single month. And unlike retirement accounts, there are no restrictions on that money. We can use it for whatever we want. So, this is why I see this approach as the ticket to financial independence. The moment your monthly passive income exceeds your expenses, you're free. You become work optional. You can choose to work or not to work because your investments pay the bills for you. And here's the kicker: building up your finances this way doesn't require you to sell off your assets in retirement. Instead, you can build a legacy that lasts. That's something I get excited about. If we're smart about it, maybe, just maybe we can eradicate the rat race forever. That's what drives me. Okay, so that's it for this entry. If you're interested in these kinds of ideas and this approach to investing, please check out the Phoenician League at Phoenicianleague.com. You can see a link below in the descriptions. I'll see you next time.